Well, some of these strong prospects for growth in Bahrain is representative of the opportunities attracting investors to the Middle East and North Africa, regions with more than 450 million consumers. Well, for more insight on this, alongside me is Mr. Shankar, the CEO for EMEA at Standard Chartered. Thank you so much for joining us. I know, we speak to each other every couple of months, and a lot of the times you're slightly, I wouldn't say pessimistic, but certainly cautious about the outlook for the region in general. Now we have so much of this quantitative easing coming up in the States, and the concern would be that this may create asset bubbles that won't be sustainable in the long run. Is this your main concern?
Clearly, asset bubble is a concern, but if you just look at the region as a whole, I think we need to look at three different types of economies. Those which are driven by oil, the oil producers, those who have a huge reliance on trade, like Dubai. 40% of the GDP of Dubai is driven by trade flows, so improvement in trade flows helps Dubai. And the third is the size of the domestic economy. So the large domestic economies like Egypt are insulated, if not completely immunized from what's happening elsewhere in the world. So, you know, different solutions for different economies. Clearly, quantitative easing is important to keep going so that we don't have a double dip recession in the West. But you're right, the unfortunate unintended consequence of that could be a rush of money to markets, both in Asia, Middle East, as well as Africa, and creating asset bubbles, and which is what the authorities are struggling with.
And is this a concern that you have, and where would you see the asset bubbles? I mean, are there danger zones that we need to highlight?
Real estate in China, for instance, was a good example where the authorities came in with more macroprudential measures, cracking down on bank lending, setting the appropriate ratios in terms of loan to value, or Brazil introducing a tax on inward flows. So there are multiple ways to tackle it, and the prescriptions are there, whether you call it a entry tax, you have a capital gains tax, or simple old-fashioned macroprudential measures, but all of them have an appropriate place to kill asset bubbles.
Now, what surprised me yesterday was by hearing what the Carlyle founder, Mr. Rubinstein, had to say, is that he sees opportunity specifically in Turkey, but also in Egypt. Are these countries the ones that are going to become stronger in the region amongst the non-oil producing countries?
I think so. They have large domestic economies. Many of them have put their houses in order. They have introduced strong reforms, economic reforms, regulatory reforms, so they are in a good position to take advantage of what's happening.
Dubai World was just, a year ago. Are you concerned that something like this may happen again? I mean, what are your thoughts exactly on the region in terms of investment opportunities? It will attract probably more foreign direct investment, but there are concerns.
If you take the high yield or the bond market, clearly huge amount of interest again in the Middle East paper. We were just involved in the Department of Finance. Dubai issued 1.25 billion. Then the DEWA, the Electricity and Water Authority, 2 billion. And then again, there was a convertible bond for EMAR for 500 million. And then again, if you go across to Qatar, QTEL did a couple of $1 billion of issuance. So lots of issuance is happening. Clearly, emerging market investors looking for yield, and the region presenting a lot of opportunities. As far as foreign direct investment is concerned, I think it will follow.
V. Shankar, thank you so much for joining us here on Bloomberg.